Hi everyone and welcome to today's morning report on Friday the 8th of April with me, Rich Perry, market analyst at Handset Markets. We've got a relatively stable start, a decent early gains on European trading session with the FTSE up 0.6 to the DAX up 0.8, and that's sort of come a bit of mild sort of improvement in sentiment, which followed really on the back of a on the back of a speech by Janet Yellen yesterday, whereby Yellen sort of talked about the fact that the labour market was healing and also sort of defending the rate hike for December from the FOMC. So what we have seen is a slight sort of stabilising of the US dollar, which I'll show you. Slight stabilising of the US dollar, and we've seen Treasury yields slightly higher, certainly off their lows from yesterday on the 2-year and the 10-year, and that has also helped again with an improvement in the oil price from yesterday's decline, and it's just generally speaking, these markets are looking a little bit better. Will it last? Well, it remains to be seen. I mean, the improvement in sentiment has seen a pickup in the Japanese yen, which is interesting. In the pickup in dollar yen, where the Japanese yen has weakened, and that weakening of the yen has been or the strengthening of the yen has been a big story in financial markets in the past week or so, and a bit of a slight turnaround that's helped to stabilise sentiment. But as to whether this is sort of more of a dead cat bounce or not remains to be seen, because that US dollar is not really showing too much strength, as it were. And it's interesting that we've got this sort of slight turnaround in the dollar yen, but again, it did reach sort of rather extreme levels, and perhaps it's a little bit of a near-term unwind. But we've got equity markets positive today, so that's a good thing. Now we've got pretty much a mixed outlook across these forex markets, really, with the slight improvement in sentiment that has hit through a weaker yen, which is also feeding through into stronger commodity currency prices. But the main currency pairs that are performing, or the main commodity currencies that are performing, are the Aussie dollar and the Canadian dollar, and certainly that has been helped by the oil price improvement and the improvement in commodities. So it's generally speaking interesting moves that we're seeing with these turnarounds that of the outlooks that we've seen in recent days, whereby the commodity currencies had been under pressure. Now they're sort of beginning to turn around again, but again, will that last? Now we haven't got a great deal of economic data today. We've got the UK industrial production at 9:30. That's expected to come in flat, actually, at 0.0 on the year-on-year basis. So that's not especially going to be positive for sterling. And then this afternoon we've got the Canadian unemployment, which interestingly enough is expected to stay at about 7.3%, but again another slight uptick in the claimant count by 10,000. So certainly you'd argue that this Canadian unemployment seems to be sort of beginning to pull higher, doesn't it? Interestingly there. And we've also got a speech by FOMC Vice Chair Bill Dudley today, and he basically tends to sort of sit alongside Janet Yellen, metaphorically, on monetary policy, and also obviously being the vice chair. And he's got a speech at 1:30 today, so the markets will be looking out for that. Right, so my chance of the day is the Kiwi. I did the Aussie yesterday, which showed the correction in the Aussie in the past few days, and we've got the Kiwi here, which, to be honest, has had a similar correction, but not so much of damage going on in terms of the technicals. We've still got this uptrend channel intact, and we're basically just unwound back to the breakout point, which is 67 at 50, and that has been a basis of support in the last week or so, and again finding support around that level and bouncing. Look at these momentum indicators; they're still pretty positive, aren't they? Still, with the RSI sort of finding support around that 40s level. It got to 50 and sort of looked to turn up today. The stochastics again back to around 40, where the recent sort of corrections have come back to and found support, and looks to be now starting to turn around. So this is a bit of an interesting crossroads, I think, near term. I think this support at 76.50. If you do lose that support, then clearly we could come back for a test of this this trend channel low, which coincides with actually around about that 66, 67 kilo that we got from late March. So we could see if that 67.50 level is broken, you could see a test of the trend channel lows. But for now, we've got that support in place, and it could be a turnaround. Now you've got the 68.60, which was yesterday's high, in place there as the initial resistance, and that is clearly a level that the market will now be looking at. And interestingly enough, that sort of again is around sort of a bit of a near-term pivot level, isn't it? With this breakout high area, the old lows again, and a bit of a range high. So it seems to be that that 68.50 area seems is a bit of a pivot area for the Kiwi. So watch out for that. But yeah, the support has come in overnight, and it's sort of holding now. And you look at the hourly momentum indicators, you'd say, well, that they've picked up from above 30, so that's generally speaking, it looks to be more of a neutral configuration, doesn't it? 35 towards 65 on the hourly RSI in the last couple of days, and that's sort of reflective of this sort of trading range we've arguably sort of forming here. So you're still playing in that trading range. So until you get a breakthrough either way, I think you're going to get pretty much a pretty muted outlook for the Kiwi. But that support around 67.50 is clearly important. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.